Double the impact. White House economic advisor Kevin Hassett telling After the Bell in an exclusive interview why the economic damage from the shutdown is worse than predicted. Take a listen.
We made an early estimate right at the beginning of the crisis that was a little bit lower than the estimate you just cited, and have been studying it hard as this has gone on, and have found that actually the damage is a little bit worse because of government contractors. The fact is that there's a lot of pain.
All right, joining us now to discuss is Art Laffer, former Reagan economic advisor and Laffer Associates founder and chairman. Thank you so much for joining us. So
my pleasure.
We're trying to kind of sort through what is the real impact here. And they're not getting paid now, but they're going to get paid later. I understand the loss to the businesses maybe that are right around where they were, because those people, are not going to buy 2 sandwiches in the future when they go back to work. They just missed out on that business. But in your mind, if we have 380,000 workers that have been government workers deemed non-essential, does this raise a legitimate question about the size of government?
Well, the size of government's a real problem, independent of the shutdown, totally independent. Now, what Kevin Hassett is talking about, and he really knows his stuff really well, he says there's going to be an impact. I think a lot of it's reversible. So once these people do get their paychecks, once these things come back, I think they'll more than offset some of the downside on the economy. But there will be some net damage, but it's not huge. And it does illustrate very clearly that these non-essential workers, some of them aren't really necessary. At least they're not as necessary as the tax dollars we use to fund them. And we should reduce government spending. It's the one area that the Trump administration has not been able to handle well yet. It's very tough to get your arms around government spending. But if you look at what he's done on taxes, it's the best ever. If you look at what he's done on regulations, even better than that. Monetary policy, I think, is in great shape. Trade policy, I think, is going to be great. And this is just a minor blip, if it's that at all.
So James Freeman of the Wall Street Journal raised a really interesting question last week, talking about the idea. So if you have 800,000 workers that are missing paychecks, 420,000 of them are so essential that they're working without pay and they're going to get paid later. But 380,000, as I mentioned before, deemed non-essential. Yet we have these open job openings in the private sector, and we don't have people to fill those.
Yeah, I know.
Are we sort of holding hostage in one area folks that could be working in a different area, especially as we watch the unemployment rate drop so low?
Yes, I think you're totally right. In fact, one of the arguments in favor of the shutdown was that some of these government workers would find alternative employment and actually wouldn't come back. They quit their jobs with the government, and that would save us the money, and they'd get private sector jobs, which would increase output, employment, and production. And, when you have government bidding much higher wages against the private sector, what you do is you just take good people out of the private sector and put them into non-essential jobs in government, and that makes no sense whatsoever. I don't care if you're a Republican, a Democrat, a liberal, or conservative. It makes no sense whatsoever.
So that is the problem, though, that people are being paid so well in the government sector that they're choosing that over the private sector jobs that are open? I mean, that's really what you think is going on?
I think a lot of that is going on, that's for sure. I mean, these jobs are very highly paid. Their coverage and health insurance and all that other stuff is very high, and it makes them non-competitive with the private sector, when in fact I think they'd be producing a lot more and a lot more useful services in the private sector. And that's something we should really get into. And let me just say, Melissa, as well, some of the government programs, I mean, when you get paid for not working, a lot of money, whether it be welfare or whatever it is, unemployment compensation, such that you really don't want to go to work because your non-work pay is so high, that also is a lose-lose situation. Taxpayers lose, and the private sector loses, and also all the needy services lose as well. So, this is a very big eye-opener. But let me just say that whatever it is, it can't be that bad, or the stock market wouldn't have risen by as much as it has.
I started the show like that. That's exactly what I was saying in the first
Well, I heard you, and I just copied you, to be honest.
Okay, so you're flattering me there. I like it.
No,
I like that. You come back right away.
I'm flattering you, but I'm also saying you're really right. The stock market's far better indicator than someone crying in a corner.
What's really going on. Yeah, because it's not emotional. Art Laffer, thank you so much. Appreciate it.
Thank you very much.